All right, what's going on, y'all? So today is another Trading to Freedom series episode. This is episode 10. The topic of today's video is risk management, right? We'll talk about that a little bit more at the end of this video, but today let's get into the recap for today. All right, so here's the 5-minute chart. Basically, what I noticed is that we delivered lower from Asia session and London session. I put the kill zones here. Right, we delivered a lot lower to these sell side imbalances right here. So that's what I expected actually coming to the day. And I saw that pre-market took out London lows. So now I was targeting London highs and Asia session highs for the reversal. What happened during pre-market? During pre-market, we were inverse this fair value gap, this 5-minute gap, or actually 10-minute gap right here. This was a 10-minute gap, and we inversed, closed above it. But we didn't close above it with conviction. And what I mean by that, like this was a bit of a choppy close, and this right here also gave me just told me that, okay, this isn't the true reversal yet. This is just a retrace, right? And I knew that if we're going to be delivering higher today, New York should open lower. So that's what happened, right? New York ended up coming down, opening lower, marked out this gap. We came below it, and then we created this SMT with NQ. After we created that SMT, I waited a little bit more and found a setup. So right here, right when price came down, delivered lower, I found this 2-minute inversion right here. Price inversed and closed above it, but it was a bit choppy with the close. So when it closed above, I ended up just entering as soon as we got that closure above this 5-minute gap, and entered longs right about here. And this was my problem. I had sized down a little bit, but my drawdown was so tight on my account that I ended up just risking. Let me get this out the way. I ended up just risking right here, right to this fair value gap, because I just didn't expect this gap to get mitigated. I kind of just expected price to boom straight up to the upside after this retest. And that was my problem, right? This was my target. It was right here, this imbalance. And price ended up coming down. I didn't even wait for the pullback. And price came down, ticked me right out, and then delivered. And it was, as soon as that happened, I actually didn't even see this delivery because I just locked my account and got out of there. But seeing this happen now, you would think it'd be super upsetting. And yes, but I'm not upset at the fact that I lost. I'm upset at the fact that I didn't risk correctly here. I didn't risk correctly, and that's where risk management is a huge role, because if I would have, set my stops to this swing low like I should have and wanted to, this would have played out fine. Or if I would have waited for my pullback and still set it to even this swing low, I would have been fine. But I did end up doing that. So, we live and we learn, and I'm really glad I was able to catch that and come back and tell you guys my mistake so you guys can avoid this mistake as well, because that is a problem. Like you're entering after, inversion, after a sell side, buy side sweep, highest time frame inversion, right? Maybe even an SMT as another confluence, and using your daily bias, but then you enter and then boom, you get stopped out right away because you're not risking enough, right? You're not risking enough, and you're not, or you're just not patient enough, right? Not waiting for that pullback, because that's very important. Waiting for this pullback, that gap, because it left a gap when we broke structure and inversed the gap. We have to come back and take this level out. So that is just something that I have to learn and be more cognizant of. But yeah, let's get into the topic for today's video, risk management. I won't talk too much about it because I know there's a lot of videos out there of people explaining how to risk properly, and there's so many people out there that's probably a better job of explaining it to me. But I'm going to kind of show you how I go about it, and maybe you guys can learn or use it in your own way, but let's get into it. All right, so moving on to the topic of today's video, risk management. So I cooked up a bit of a strategy here, or a setup here for my risk management, how I approach it. So this is, all these accounts are top step accounts, 50K, 100K, 150K. You have your max daily loss limit for each account, and then your max drawdown. And remember, these are trailing drawdowns, so these change the more money you make. And so how I set up my risk management is A, B, or C setup, right? And of course, that might sound a little contradicting because you're always thinking in your head like, oh, I just want to take the most A+ setup only A setup, right? And but sometimes you don't take A+ setups. Sometimes you take setups that are, they have one or two confluences, but pre-market moved a bit weird, and the draw on liquidity is clear, but there isn't a whole lot of volume. And that's what I mean by the difference between A, B, and C setup. Like a C setup to me is still someone else's A plus because I'm willing to take it, right? If I'm taking a setup, it's because I'm convicted and I know, right? I have the confluences, I have my bias and everything like that. It's just there's other different confluences, other things that come into play. So let me just explain to you what I mean by A, B, and C. And it all varies honestly, but let's just compare an A to a C setup to make it as clear as possible for you guys, right? So a C setup to me, we'll start off with a C setup. What is a C setup to me, right? When I'm looking at the charts and I'm about to take a setup and I want to, right, what first thing I'm gonna do is understand, am I taking longs or shorts today, right? That's the first thing I'm gonna do is decide long or shorts. So I'm gonna find out my bias, and then I'm gonna look at the sessions, previous session, and how they moved. How did Asia and London move? Was Asia and London taking out highs and lows, or was it just ranging? Right? Was Asia and London tapping into higher time frame PD rays? Right? And also, what did pre-market do? Pre-market's important too. How did pre-market do? Did it range? Did it just consolidate, or was it taking out session highs or lows? Right? So if it was just ranging, consolidating, and even London and Asia session were also consolidating, not making very much moves, then that's going to be a C setup for me because you're not going to be as convicted taking a setup on a choppy day compared to a day with a bunch of volume and highs and lows being taken out and higher time frame draws of liquidity being tapped into. So that's what I kind of mean by A and C setup. It's hard for me to explain because this is still new to me. I'm still trying to figure out what I'm considering an A and B and C setup, but that's kind of how I look at it, right? I look at it like, okay, how did the session move? How did previous session move? How did pre-market move? What is the volume? Do we have high volume or low volume today? Is it a high impact news today? Right? There's so many different confluences when it comes to like trading and on understanding if this is an A or B or C setup in my eyes. So I'm still trying to differentiate like what is important and what is not, and what's going to decide, is it an A, is it a B, or is it a C? Okay. But the biggest thing here isn't like understanding, okay, what's an A, what's a B, what's a C. It's understanding your risk, right? Like you can only risk, the most you can risk on a 50K account is $500. That's the most I can risk. If you're risking more than that, and if I'm risking more than that, sorry, then I'm breaking my rules, and everything's irrelevant. As soon as I break my rules, everything is irrelevant. It doesn't matter if I win or lose. It doesn't matter anything. Everything's irrelevant because you just broke your rules. Then you need to go back to psychology videos. You need to go back and get on the demo and just start realizing like, and understand that you're breaking your rules. So none of this shit matters, right? Like once you break your rules, you're throwing everything out the window. I promise you. That's the best way to look at it in my eyes, right? So, but having a risk management system is so important, right? It might seem tedious, it might seem like extra to people, but I promise you, it's not really about understanding it's understanding how much exactly the dollar amount I should be risking. It's understanding, okay, this is the most I can lose, right, on this particular scenario. If the market is ranging and just consolidating, and pre-market didn't move much, Asia and London didn't take out highs or lows, right? Then this is gonna be a C setup. This is gonna be a C setup because of that, right? Because of what was happening before, right? There isn't a lot of volume in the market, so the most you can risk is $125, $150, $125. That's the most I can risk. That's the absolute most I can lose today, right? So that's why I think risk management is so important. Not because you need to figure out the exact dollar amount you want to risk or you want to win. It's knowing how much you can lose and holding yourself accountable to being able to understand, okay, today looks like an A+ day because, right, Asia session, London session moved the way I wanted. Pre-market's moving great. We have a lot of volume. We're tapping into a higher time frame PD array, right? There's a clear draw on liquidity. This is an A setup. The most I'm risking today is $500, and now you can be safe and stress free because you know the exact amount you're willing to lose and you're going to lose, right? So that's kind of why I think risk management is important. I want to say it one more time. I don't think it's the most important reason for risk management isn't to know the exact dollar amount you want to win or the exact dollar amount you want to lose, right? It's kind of like, I'm not saying it's irrelevant, but it's not as important as being disciplined to your setup and your rules, right? But it's not the best setup. So you want to, leverage and size lighter because you have to understand that this isn't highest probability. But if you have a B or A setup that's higher probability, then okay, let me leverage a bit more. And You have to be okay with losing this amount. Be okay with losing $500, $250, and $125. And then that's how you really master your discipline. And also, one more point I want to cover is people might look at this and be like, but how am I going to make real money off of this? Like, that's the way I looked at it first. I was like, if I'm only risking $500 a setup, right, and I'm going for a 1-to-1, 1-to-2 ratio, right, the most I can make in a day is $500 to $700 on an A setup, on a 50K account, which is most people are doing. That's the most I can make. That doesn't seem like much. But guys, you have to understand that it isn't about making money or the dollar amount. It's about how consistent can I be, right? It's consistency. And you guys, if you're so worried about making money, right? Think about this. It's about consistency, like I said, right? But if you're able to be disciplined to your rules and your risk management system, right? Even if you're taking B setups, if you're taking that across 5 fucking accounts, 1 B setup a day, I mean, you can be making $1,250 a day. Like I'm just, that's in such a like obscured view and scenario. But what I'm saying is, it's not about the much money you make and how much your RR is. It's about being disciplined to your risk management and being consistent, right? Being able to go into the market and then right before you take a trade, understand, okay, is this B or A or C setup, A, B or C setup, and risking accordingly, right? If you can perfectly do that, you're fucking golden. And then you just start increasing and sizing up and scaling, right? You don't leverage more, you scale, right? You have more accounts, trade on more accounts, get a bigger account size. You start scaling. Don't leverage more, start scaling more. But on evals, it's a bit different. You want to scale a bit, you want to leverage a bit more, right? These setups, you want to leverage a little bit more than what this is on each one when it comes to evaluation, because you're not making money in evaluation. Why waste your time, right? And people say like, oh, I want to be consistent, so I should be trading like I am trading on an express account, but not if you don't want to be stuck on an eval for fucking 3 to 4 weeks. Like, you got to size up a little bit more. I'm not saying full port. You don't have to make $1,500 in 2 days and pass an account. Like, it can take you a week or two to pass an account, but it's a little bit different scenario. I don't want to ramble too much though. I feel like I did talk a lot, and maybe a lot of stuff you've probably seen online already, but just make sure that you guys are being disciplined to your risk management system. And if you don't have a risk management system, make one. Use this and change it in your own ways that you believe fits you and you see fit. I'm not saying this is the best risk management system at all by any means. This is not even close. I don't even recommend you taking my risk management system, because I want you to do what's comfortable for you and what you're okay with taking and losing, right? Use this as inspiration, right? Don't copy it if you don't want to, but if you do, you can, right? I believe this is a good risk management system, and I'm happy with it. I think a lot of people use the same system, but just have a risk management system, because if you're coming into the market without a risk management system or anything in your mind, you're coming into the market as clueless. Like, I don't care if you have the best strategy, right? I don't care if you have higher time frame analysis. Without a risk management system, you're coming in the market fucking clueless. And that's what happened to me for the last couple days, right? I came into the market a little bit clueless because, like, I'm over here in drawdown, but I don't know how much I can risk. And that's the reason I'm in drawdown on such an odd number, is because I wasn't consistently risking the amount I should have, right? Like, I was risking, some days I would risk $700, and then other days I'd risk $100. Like, it was so inconsistent. So I wasn't understanding how much I was losing compared to how much I was making. But that's just what I wanted to say for you guys today, guys. But yeah, that's about it for today's video. I hope you guys enjoyed. Hit the like button and subscribe if you guys want to see more content. Comment down if you have more questions. I'll catch you guys in the next one.